Welcome back, everybody, and also welcome back, Constantin. It's fantastic to have you back again for round two. Really appreciate you taking the time.
Thanks for having me, Christopher. Looking forward to our discussion.
It's been quite a hectic year, I guess, as a CEO for MPCC containership, and also, I guess, in the world. What is your biggest reflection? I've noted down geopolitics, higher interest rates, inflation, war. Do you have anything else on that list? If you just try to summarize 2023 as we are approaching the end of it?
Well, you named quite a few very, very important factors that have been omnipresent, I would say, in 2023. But for me, more general, I think 2023 has shown that, or once again, basically, that the world is volatile, partly fragile, and things can change quickly. And that's, I think, I would say a lesson learned for 2023, maybe not for 2023 alone, but rather a takeaway of the last 3 to 4 years. But we basically live in an era which is probably more fragile in terms of geopolitics, global economy, and hence I think what is very important, and that's maybe also some reflections already on the business side, is to be adaptable, and I think that relates to reacting on negative things, but also positive things. But I think that's looking at the world, looking at shipping for 2023 more specifically. I think shipping, the industry is finally getting serious about decarbonization. And that's, I would say, we have always felt that over the last couple of years, but 2023 it's all over the place. There is no panel discussion, there's no discussion with investors, there's no discussion with banks, where this is not a subject. And I mean, we at least believe that we will benefit from that as a company, but it remains to be seen. It's also big challenges. We have done our investments already in 2022 in quite a few things there in that field, but that remains to be seen. And for MPCC maybe and personally, be prepared for the unexpected is always what I say, because I mean, you can never be prepared for the unexpected, but you should at least be best prepared to then also adapt. And that's not just one personally and the organization, it's mainly the people that you're surrounded by, to live also a culture of being adaptable and think forward. So that's maybe as a quick, and we could talk for hours about 2023, but that's maybe the first take that I have on the past year.
I think that's a good summary. Just related to decarbonization, you said you already made some bets or investments. Was that done with clarity and this is the right option? Or was it done we have to do something, looking at the data, this is my best decision? Maybe it's wrong, maybe it's right, I don't know, but we have to push forward.
I think it's a mix. I mean, we would not go all in with full risk, right? So what we have done is we teamed up with the charterer, North Sea Container Line, from Haugesund in Norway, and Elkem, which is also a large Norwegian conglomerate, so to say. And we're kind of working on building the first green corridor in Northern Europe. We have ordered 2 ships, methanol dual fuel ships. But we have kind of back-to-back 15-year charter and 15-year also cargo commitment from Elkem, which made the deal, work, which makes risk being shared. And I think that's the way to go about these, let's say, larger investments when it comes to decarbonization. You need to do it hand in glove with partners. One alone, I mean, Maersk is obviously a different animal than we are. They can, place their bets and they can look at it as a portfolio. For us, we will have to take every decision very, very cautiously and very, very analytical, so to say. So we haven't kind of placed a lot of bets. We're agnostic as far as the path is concerned to decarbonization. We're not kind of religious about methanol or ammonia or hydrogen. We think getting some exposure makes sense, to also, because if you don't get exposure, you just talk about it, right? Then you talk about it on parties, on events, oh yeah, I know this and this, but you need to get exposure to really be closer to it, and then you can draw your conclusion and can decide how to navigate further.
Very true. There's getting it from slides to investments seems like it's a long way in shipping if it's not economic sense. Do you think that some companies who are not diligent will also risk of going bankrupt if they are not doing the process you explain now, that they're just jumping on the hot topic and that will hurt them in 5-year, 10-year run?
Well, maybe. I mean, I don't know. I think it in any event, it is a risk just to jump on a hot topic without having done your homework, regardless of decarbonization or not. So I think a thorough analysis is needed. You have to be fast sometimes. So I mean, when you look back at our company development 2017 and 18, we were running like hell because we felt there's a window of opportunity that might close. But that was in a at least in our assessment, and it could have been wrong, but it was right. In our assessment, an environment where we were able to buy very, very cheap. So the downside risk was limited and the upside opportunity was significant. So I think in those environments, but in kind of fuel questions, technology questions, it might be a bit more digital, right? So you might have put your bet on a technology that becomes obsolete over time. So the risk, and we're in a high priced environment, right? So we're at high new building prices, we're at high interest rates. So it's a different world. So it's probably not the world to run as fast as you can, but it's currently an era where you rather, place your bets very cautiously and analytical.
So you mentioned the strong partnerships in Norway, and I will just use that as a segue because I saw the royal family, politicians from Norway came to Hamburg, München to talk about how we can foster more collaboration between Norway and Germany. Obviously, you're a prime example because you're based in Hamburg, listed in Oslo, of course, but do you see there should be more collaboration between these two countries, or is it just a normal trip to have some fun and discuss business?
No, I think actually between Germany and Norway, especially the last 12 months, when you look at the energy connection between Germany and Norway, that has, things have changed dramatically, right? So I think there are so many leads, and I would argue, and I have heard that from some Norwegian friends of mine, that never ever have so many German politicians come to Norway to obviously protect, to provide security as far as the energy question is concerned, but also to team up, and I think it is a natural link to be very close to someone who like Norway also have, in my view, quite comparable kind of dynamics. It's an interesting constellation. I personally think also from our experience, from my personal experience, Norwegians and Germans get along quite well. I mean, also culturally, of course, there is cultural difference in a way, but at the same time, I think they both sides appreciate that it's reliable business partners. It's not a discussion every time around about details. It's about shake hands, look in the eye, and then get it done. And if you fight over things, there's a fight, but that's the way it should be, right? At least to have reliable business relationships. And as a group, the MPC Group has also initiated different activities in Norway. For example, MPC Energy Solutions, which is a renewable company also listed on the Oslo Stock Exchange, or we have done quite a number of individual projects in the project market, be it also in the tanker space or in the dry bulk space. So I think there is the good thing, and maybe it's looking also a bit from where I'm sitting, is asset heavy businesses and volatility is nothing that where Norwegians are concerned about, right? To the contrary, they are well familiar with these aspects, and that's also why we came with the container company to Norway in the first place, because we know well-educated investors, not afraid of volatility and hard assets, and I think that will be further fit going forward. But I think to your main question, I think also on the political and on more the country level, there is more and more common ground, I think, going forward, looking at energy, and that will pave the way. And it was actually I did attend the welcoming event here in the town hall with Crown Prince Haakon. So it was quite impressive, and I think it's good to see kind of these presence also here in Hamburg, and I think it was a good discussion about energy, but also about shipping, along with his visit here.
That's the perfect combination. So I know this is a hard question to sort of give your 2 cents, but I'll try it anyway. So German economy, recession or not, slowdown, what to do, energy transition. Like, you're in Hamburg, you know the German economy better than most Norwegians, I would just imagine. So what can you share about the trajectory going forward? Is it going to be difficult for Germany to get growth again, or do you see any interesting pathways?
Christopher, that is quite a topic, I must say. And how much time do we have? But no, on the one hand, I'm not particularly positive about the German economy these days, and I will explain why in a second. But on the other hand, Germany has always been quite adaptable to changes and has been able to turn around quickly from downturns. And I'm confident that this will be the case this time around, at least in the mid to long term. The question is under which political leadership and what will happen in the meantime. But that's possibly something also for the another episode in 12 to 24 months to draw a conclusion. But maybe a few words on German economy from my standpoint. If you look back the last decades, let's say 5-6 decades, the growth of the German economy was amongst others based on cheap energy from Russia to support the heavy manufacturing, free security provided by the US, and a comparably stable political system in Germany. And then obviously Germany having, I would argue, fantastic high quality products and being a leading export nation. So a lot of that has been the ingredients, right? A lot of that has changed, right? The political or the geopolitical landscape is less stable. The US has a lot of internal things as well. With a war basically at our doorstep, the feeling of security has changed. Cheap energy from Russia is a thing of the past. To our point earlier on Norwegian-German relationship. So the German economy has been troubled by insecurity. Then you have inflation, you have the high cost of living energy. So there are quite a few things that are concerning. Then we have a current coalition of liberals, social democrats, and Greens. They had a tough time agreeing on issues and measures from the outset. And this has added insecurity for businesses and people, and obviously rising interest rates. But I think a very interesting fact is quite recent, and I don't know if this is known in Norway, but a key component of government financing strategy in Germany has been declared as an illegal practice by the German Federal Constitutional Court just recently in November. And that is a 260 billion euro funds that have been tapped. And that is because of I would say, the marriage between the political interests currently governing this country, who have had an approach to subsidize or enforce the transition of the current German economy to be less carbon intensive. And this is done without raising taxes and at the same time increasing state spending, for example, on social welfare. All of that makes sense, but the fact that this has been now called illegal has been quite a shock. And I think it will be a big challenge for the current government. And let's see whether they will survive until the next election in 2025. So a long answer to your question, but I think there are quite some developments. And again, in some, I'm positive. On your recession question, Germany's GDP was already expected to decline by, let's say, -0.4 to -0.8%. Before the funding scheme disaster that I just mentioned. So let's see where that will lead us. But I think in general, next 1 to 2 years, not positive, mid to long term, positive.
I think that's a great summary, and also people should dive into those topics you mentioned if they need more depth. So if we make a transition over to your market, the containership market, I don't know, I went to a conference in Greece, and everyone who mentioned containers was like mentioning a horror story in the making because of the supply and order supply. I know it's not that easy, or there's different answers, but can you just give like the overall picture? Because I guess it's fair to say that the future expectation is that it's getting rough seas ahead, giving the order book. But maybe you can just paint the broad picture, and then we can dive into your particular niche as a second layer.
Sure. And I would say in general, the first statement I would make, in general, the industry has evolved and matured to a degree. So I would argue the demand side, further demand increase will be pretty much linked to the development of the global economy in the past, people always said, well, it's a multiplier of 2 to 3 times GDP growth. This is not a valid equation anymore in my book. So I would rather look at 0.8 to 1.2 times GDP growth. So the demand side, we will see growth, but that's only one part of the equation. As you rightly said, there is a significant order book. But on the demand side, what is probably a bit more exciting is the potential developments of places like Africa. India has seen significant growth and still has significant potential in my view, but also the Middle East and Latin America. So there are obviously in relative terms, I expect significant growth there. In absolute terms globally, it remains to be seen, right? We're still very, very much dependent on China as well, right? And the consumption in Europe and in the US, obviously. But this is at least, besides the, let's say, less positive outlook on the demand side, this is probably some positive. Then on the supply side, you're absolutely right. And if you were in Greece and people painted a dark picture, that is mainly related to the supply side, of course. 7 million TEU order book, 30% order book to fleet ratio, but all of that, it is dominated by large vessels, and the average age of the fleet is 14 to 15 years globally. So we're also talking about the next 5, 10, 15, 20 years. There is a necessity to renew the fleet, which is also accelerated through new regulation. And the new vessels that come in are mainly very large ships. So I think there will be a bit of a reshuffling. And I would argue, and I'm not saying kind of we in our small segment are somewhat protected, but what I'm saying is over the next 3 to 5 years, I do expect certain sectors will be underbuilt and others will probably be overbuilt. Now, it doesn't mean we will have a two-tier market and the small vessels make great and the large vessels don't. I'm not saying that, but I'm saying you need to look at the intricacies of the order book and of the intricacies of the age structure, where we will see significantly more recycling in the smaller vessels. Is that the next 1-2 years? I'm more on the 3 to 5 year horizon. And I actually expect quite some choppy waters next year. But we might already see improvement in 25, 26, let's see. But choppy waters also makes opportunities. So, and that's what I'm excited about.
Can you also explain the decision in, locking in long-term contracts a while back ago and how important that was? Because I guess that's also the part of the exercise is, when do you lock in contracts? What kind of contracts are you locking in to, protect the future, sort of?
Absolutely, and I think it's about being disciplined in your strategy, right? And not kind of, and that relates to capital allocation, fleet decisions, but also leverage, for example, right? So I think very importantly has been that we could have, also said, let's sell more ships in the early uprise, but we felt, you always have to look at the options, right? And the option is to sell a ship or to lock in the cash flow. And at that point in time, we felt that logging in long-term cash flows is the right thing to do, because that creates value. And if you sell a ship, the ship is gone. You might have a good profit, but the ship is gone. If you can lock in good cash flows, which are almost a reflection of the price that you could sell it for, you still have an optional value down the road. And I think that has been the right strategy. I think we also have quite a staggered book for next year. We still have, we have 66, 67% of the days available covered. So we have a very strong backlog still for next year. Which will then come down in 25. But we think that has been a very important factor also to be able to carry out the other measures, paying down debt, still paying a very big dividend. We would have probably not been in the same position if we just had tried to sell ships here and there. So I think it's about the mix of, yes, selling ships here and there, but also having a clear chartering strategy, especially in a rising market.
Given your owner structure and the way you operate in the broader system, is this company built to last 100 years, or is it built, have like an exit if time is right? Or is that, always a discussion at the board level?
Well, initially it was a company for a period. Initially it was an asset play. We felt, this is a good window to buy. We didn't know how big it could become, right? I mean, the window could have closed after the first 10 ships, and that would have not been a viable kind of platform in a way, or company from pure size terms. It could have been a great investment, but not in terms of developing something bigger. Now, we feel, and I personally feel, that there is a very good market position. We have built a company that is, almost net debt zero. We have 60 plus ships under our belt as a company. So there is way more to gain for the company and for the shareholders by continuing to operate and not to have an exit strategy. And we have delivered a lot of value already. So I think going forward, you should never say never to anything, right? So if a great offer comes, of course, it's something to discuss with the shareholders. But I think in general, we have developed the company into a position that it's supposed to last for longer. And is it 50 years? Is it 100 years? Is it 20 years? That time will tell. But I think we have the platform, we have the team, we have the portfolio to really continue to build this company for the next decades.
Very interesting. So I remember the last time we spoke, you sort of said that now we're going from a transition from growth to value in terms of how should you look at the stock, right? And of course, some investors are triggered by momentum, high growth, and correct me if I'm wrong, but I believe the stock was one of, if not the best performing stock in Oslo in 1 year, was it? Correct?
No, absolutely. Indeed. Last time we spoke, I think it was early 2022.
Yeah.
We just ended the year 2021 as the best performing stock on the Oslo Stock Exchange in terms of stock price performance. Now, 2022, we ended as the highest paying dividend stock. So we were the best performing stock, highest paying dividend stock. Let's see what the final statistics on 2023 bring. But I think we will neither be in the one or the other category, the leader. But on the dividend side, we have paid in 2022 47% dividend. So the yield was 47%. And this year to date, we're already at 43% dividend yield. And there's one more quarter to come. So I'm quite positive that we will have a very, very significant dividend yield this time around. We might even be on the top, I don't know, but there are some tanker stocks who have also paid a lot. So let's see. Let's look at it once the year is over. But that's the development.
What I was thinking is that do you manage to bring the same investors from the journey going forward as well, or do you have to transition the investor base as well? Because probably stock has different value proposition at different times, especially in shipping. All the people that know shipping know that it's cyclical. You need to know when to buy and when to sell. So, in your view, should you have loyal investors on board, or should you have investors who are going in and out of the stock based on the market circumstances, or is it always a combination?
I think it depends on where you are in the phase. I think initially, with our proposal and the investment thesis, it was, I would say, asset play investors, clearly. But now over time, obviously with the dividend, and I think when we spoke early 2022, I think we were just about to pay out the first dividend, basically. Now within 21 months, we have paid more than $730 million in dividends. So it is clearly, people have moved on. The asset players have moved on. We have quite a turnover in investors. But I think we now have quite a high number of investors who are happy, because I think the most critical path item is for us to be a reliable counterparty to investors as well, right? They need to know what to buy in. And I think that has been in shipping quite a challenge over the decades, that, people sometimes say one thing and do the other thing. We have said, we will stick to the dividend. We will implement the dividend the moment it is right. And we have paid out, already now way more than we have raised in initial equity, right? So yes, obviously everyone enters at a certain price level, but I think at least we have delivered, and we will continue to deliver that. So it's really about making sure you walk the talk and bring that forward. And definitely. On the investor side, maybe one last comment is, we have grown also significantly the investor base. I mean, we are quite a famous retail stock in Norway in terms of number of shareholders. we are way bigger than some of the other, I would say, more well-known Norwegian shipping names. I think it's because of the transparency, maybe also because containers is a slightly different animal. But we want to be fully transparent. Everyone can understand the dynamics and can make up their own mind whether it's a good choice to stay on board or not. We believe, you know, we have walked the talk. We will continue to pay dividends. We will continue to do what is right, and we hope that is convincing investors, obviously.
Definitely, because that was the second part of the question, the ER strategy. Because if you're a foreign company coming to a new country, it's quite remarkable to get, you know, that popular in retail investing, etc. So if people come for you for advice, listing a new stock, and, you know, have done their case study on how you did your investor relations strategy, what do you tell them? Are there any, you know, big highlights from that journey?
Well, I think what is super important is to engage and to be transparent. It's you know, sometimes people just go somewhere, want to have the money, and then let us alone. I mean, of course, do I also sometimes have, let's say, investor meetings that are a bit more difficult, and you know, of course, but I think it's about being even there in bad times. And we also had quite some volatility in our story, obviously. Being there, talking to people, explaining your thought process and how you approach things. And I think that makes relationships more sticky. And we have, and I think that's different. That's even different to, let's say, a lot of the other companies we are a Norwegian ASA, right? So I'm in Norway very frequently. We have an office there. We have people there. So we are I would argue we are even more Norwegian from a corporate standpoint than a lot of the Marshall Islands or Cayman Islands companies that are listed and that are Norwegian, right? So I think it's about also making the right choice on corporate setup and on commitment. We knew just to, you know, have a fly in, fly out kind of relationship with the market is not the way to go about it. And we have, in fact, invested quite a bit into that. And I think that is paying off, and people realize that we are there, we are approachable, we are transparent, and we are actually investing into the IR function and IR relationship on the ground in Oslo.
Would there at any point be a conversation about listing it in New York as well? Or how does that thought process look?
We looked at it on a few occasions. Actually, it's a constant topic to see are there benefits, right? What we have, however, seen, especially in the volatility of the market, that the Oslo market reacts very, very good. And yes, you might be able to tap some more investors because it's a bigger market. But I think the pricing in Oslo is good, and you know, the let's call it the shipping savvy investors in the US, they also know that they need to look at the Oslo market as well. So I don't think it's a big difference. It's probably a bit that, you know, our peer group, for example, is listed in the US. I mean, we have 0 peers listed in Oslo, actually 0 peers listed in Europe. I mean, Hapag-Lloyd is the only relevant in Maersk, but they are different animals, right? Different. I mean, they are our customers and way larger and with a different business model. So the US is always an option, but I think for the time being, we're very happy where we are. And we also, in hindsight, don't see a significant different valuation metrics of our peers listed in the US versus us being listed in Oslo.
Understand. So talking about valuation, because I had some question about it, because it's interesting to hear your thoughts. So if you just go all the way, you know, broad at the start, do you believe that a valuation of company is it a science or an art, or always in between?
I would say it's always a mix, because I mean, what is required? You require a combination of financial analysis, market research, and subjective judgment in a way. And you need to determine the fair market value of an asset or a business based on factors, again, financial performance, industry trends, competitive landscape, future prospects. So I think it's always a mix. Is it a 50-50 mix? Is it a 75-25? In my view, there's no general rule. Evaluation must always consider the story behind the numbers as well, right? And that's the art part of things. And I would say, very importantly, it also depends where's the company in the development. If you look at, do you look at asset heavy business or asset light business models, scalability, right? And I would argue in shipping, in hard asset shipping at least, it is generally more science based than art based. Than an early stage startup in a digital business model where you have scalability and you don't see the value yet, but you need to believe in the value tomorrow. But what is, in my view, most important, we touched on it earlier, is the people, especially in shipping, because shipping companies in the same sector perform differently because people take different decisions about capital allocation. If you have asset heavy businesses, it's really, when do I increase leverage? How do I treat capital allocation decisions? So I would argue, when you look at the art part of things in shipping, you need to look at the people and what they decide and why they decided. And do they have the right? Do we have the right sponsor, for example, also behind the company? And that is very important. But and finally, on listed shipping companies, it's a lot about momentum and sentiment. I mean, you got that sentiment in Greece, as you said. People said, container market was very bad. But it's, if you fight against sentiment, you do not get the right valuation. And that's actually the interesting point for people to run their numbers, because then you're usually mispriced.
So I know this is very hard to answer specifically, because it's probably, not that the compliance would want you to answer. But if you try to break down the value of MPCC, what should be the stock value or the stock price, and the valuation of the company? Do you think that you look at the same metrics as everyone from outside the company? Or like, how can people try to make a good judgment if they're looking specifically at MPCC?
Well, that's a very good question. I would say, I mean, we are always very transparent in our presentations. We talk about, our backlog, the steel value of the assets and the upside there. I would argue, as an investor, you need to, and that's my point, you also need to consider not just the EBITDA and the value in the company. You need to consider, will the company be priced adequately? And that's sentiment, that's also management. And will the cash flow actually come my way? Can I either exit through the stock price that is fairly valued because there's positive sentiment, or do I actually get my money through dividends? And I personally think that I probably look at it slightly differently, because I obviously know that my conviction is we will continue with the dividend, right? If the market comes down, our dividend policy will mean we have to reduce the dividend, because it's 75% of net profit. Net profit comes down, dividends come down, but at least people know what to expect. And I think that's probably why I would attribute a slightly different value to our company than outsiders who don't have that knowledge of, is the management really doing, is the board really continuing the dividend, or will they, cut it at some stage because that's the way, most companies do it. And my full conviction is that we will continue. And that's probably why I have a slightly different view on valuation.
Okay, that's a very good answer. So looking into 2024, what are you most excited about? Can be the company, or, any specific topics as well outside the company.
I'm definitely excited when you look at the company at the pure fact that I expect choppy waters. It means a lot of stress. We have 20 dockings coming up. We will do 13 retrofits on ships. I mean, we have a hell of a lot to do as an organization and with our partners. But I'm excited about this, and I'm also excited because I do expect choppy waters next year. And choppy waters, if you are in a good stable state running into it, it's fun, right? It's like going into whatever, in Germany we have the Dome, which is a big exciting place where you can go up and down, in kind of all kinds of things. And the question is, are you prepared? Do you know what you buy into? And I think we don't know what next year brings, but we know that we are in very good shape, and we know that we have very low leverage. We know we have a lot of capacity, but we also know we're not under pressure to do things, and that's important as well. So I would say, from a company standpoint, that's what I'm excited about. Personally, I'm excited to hopefully do a bit more sports again. I do a lot of sports, but I have done less sports in 23 than in the years before, and I'm excited to go out. I still play a lot of tennis, hockey, go skiing. I will actually go skiing to Norway for the first time over New Year. So that's what I'm excited about as well. I will go to Hemsedal with the whole family, with my 3 kids and my wife. So looking forward to that. It will be cold, I expect that. in the Alps, it's usually not as cold, but I mean, there's only wrong clothes. We have a saying in Germany: there's no bad weather, there's only wrong clothes. So excited about that as well.
It's like a very interesting year ahead. You just touched upon, it's going to be a hell of a lot of work. So I know this is like more like a personal reflection, but do you just think that as the CEO, you just have to say that, this is the most fun job you can have in the world? Because I don't know, with success comes options, and with options, it comes alternative costs, and there's so many things you can spend your time on. So if you're constantly at work, 12 hours in some days, how do you like keep motivated and still have that same fire in your belly? Because building a company is usually a lot of fun in the start because everything is new. But then you get into maintenance, you get into internal politics, people, HR. There's so many other factors that come to play. So is that also a personal development, or is it just as fun as it always has been?
No, it definitely is also a personal development. I'd say at the same time, also the building phase is not fun because you build something. It's fun because of the people, right? I mean, for me, it's important to always keep the right, people, the right attitude, always have fun, right? I mean, without fun, life doesn't make sense at all in my book. so I think in building a company, you can have fun. In now navigating the company, I would say even in the difficult times, we had a lot of fun here, and that's super important. And therefore, I think to have the right attitude in different phases of the development, I'm kind of a person. I always think the glass is half full, and that's the way you need to go through life in my personal view. And if you have the right people around you who also have a glass in their hand that is half full, so to say, then that's fun regardless of the market environment. And of course, different times are exciting in a different way. But going into next year, despite the operational, challenges, I would say I'm looking forward, and all the people are looking forward to it. And that's why I think it's different, but it's about the attitude with which you approach different things.
I think that's the perfect ending. Constantin, thank you so much for taking the time. I really appreciate it, and good luck with 2024.
It was a pleasure talking to you once again, and all the best to you as well.